Warren Buffett is considered to be the most successful investor in the world. According to Forbes magazine, he's the fourth richest man, with an estimated fortune of $69.2 billion. But he wasn't born rich or got his money from a rich uncle. Hi and welcome on the online money web. Today we're gonna show you how Warren Buffett made his first $1 million at the age of 32. You also want to watch this video until the end, as I will reveal 2 great books you can read and start investing like Warren Buffett. Before we start, please push that like and subscribe button so you will be the first to know when I release a new video. Now let's get started. Buffett was born in 1930 in Omaha, Nebraska in the middle of the Great Depression. At a very young age he knew he wanted to be rich so he could be his own boss. To become rich he needed money, so Warren started his first business at the age of 6 by buying chewing gum at his grandfather's grocery store and selling the chewing gum door to door. He made 2 cents profit for each package he sold. At the age of 9, for his next business, he first did a small market survey. He counted the different bottle caps at the soda vending machines in his neighborhood and found that people preferred to drink Coca-Cola. So he bought a 6-pack for 20 cents and sold the Coca-Cola door to door and made 50 cents per pack. Talking about an early lesson in market research. Did you know? As a kid, Warren told everyone that if by the age of 35 he wouldn't have made at least $1 million, he would jump from the tallest building from Omaha. Talking about motivation. At the age of 10 he sold golf balls that he and a friend went to look for in the bushes close to the nearby golf course. From an early age he liked numbers and also liked to read more than most kids, especially books about making money. One day at the age of 11, he found a book in the Omaha library named 1,000 Ways to Make $1,000 by Francis Minaker, and he thought that he found the book that would make him rich. Because the 1,000 ways multiplied by $1,000 will give him $1 million and making him a millionaire. This will be way more profitable than selling Coca-Cola door to door. One of the ways described in the book was penny weighing machines. So he bought a used penny weighing machine, and every time somebody wanted to weigh themselves, they had to put coins into the machine. The funny thing that Warren discovered was that some people came to weigh themselves several times a day. Don't ask me why. But the beauty of it all was that Warren didn't had to be there. The weighing machine was like his first employee. And with the profit he bought a second weighing machine, doubling his money without having to do the extra work. He also learned about the miracle of compound interest, or the 8th wonder of the world, as Albert Einstein liked to call it. Like a snowball, your profit will be small at the beginning, but will grow bigger and bigger as the snowball will pick more and more snow as it's rolling down the hill. As time is an important element to let it grow, time was something the young Buffett had, and he liked the idea that his profit would grow exponential. As this is one of the secrets to understand why Buffett became so successful, I would like to illustrate this with a short example. Meet John and Philip. They both invest $10,000 at a 10% interest. John decides to pocket his profits at the end of each year so he can buy some cool stuff. Hey, you only live once. Philip, on the other hand, decides not to pocket his profit but to reinvest it by buying some more from the same investment. Now let's see how much money they made after 10 years. John's money would make him a total profit of $10,000. Meaning that he has made a 100% return. Not bad. Now let's look at Philip. Philip's money would make him a whopping total profit of almost $16,000 or a 160% return. Giving him an extra $6,000 profit or 60% more in comparison with John. And the only thing he had to do was to reinvest his profits. Warren Buffett is now 12 years old, and after a lot of hustling, he managed to accumulate $120. Now before you start to laugh, this would be equal to $2,017 in today's money, quite impressive for a kid his age. Warren discovered the stock market through his father, who was a stockbroker, and helped him buy his first shares. Warren bought 3 shares of Citi's Service for a total amount of $114.70. But his shares of Citi's Service almost immediately started to drop. Warren Buffett felt horrible as he almost invested all of his $120. But at one point his shares started to rise, and he was able to sell his shares at a quick profit of $5. He was super happy, at least for a short period, because afterwards the city's service shares skyrocketed to $202. He felt terrible that he had missed this opportunity of making a profit of $490, but he learned a very valuable lesson, and that is not to sell his shares too soon for a small profit. At the age of 13 he started to deliver newspapers and had already 3 routes to manage. He would wake up very early in the morning to deliver the newspapers before going to school, and after school he would deliver the evening paper. To earn some extra money he also sold calendars to his newspaper customers. At age 14 Warren Buffett was no longer earning pennies and had made $1,000, or in today's money $16,047.98. Did you know that at the age of 14, he filed for the first time his tax return, deducting his bike and watch as business expenses? Already a clever kid for his age. When Warren was 16 years old he was already making $175 a month, or $2,940 in today's money, from selling newspapers, making more money than his teachers at the time. He liked it because he could be his own boss, planning his routes the way he liked. At the age of 17, Warren bought a used pinball machine and convinced the local barber to allow it to be placed in his store. In exchange he would split the profit with the barber. Quickly this seemed to be a success, and Warren bought more and more pinball machines to place in other barbershops. And soon he was running a nice little pinball empire. At that time he had $5,000. When Warren was 19 he had already read every investment book he could get his hands on and had a net worth of $9,000, making him probably the richest kid on the block. But until then, he made most of this money through his newspapers, pinball machines and his other small businesses, not by investing in the stock market. But this is all about to change when he got his hands on the book The Intelligent Investor by Benjamin Graham. Little did he know that this book would change his life and make him the investor that he is today. One of the most important lessons he learned was to look for the real value of a company and then look at the actual price of the stock. If the stock was selling way below his real value, he could buy the company at a nice discount, the so-called margin of safety. For Warren this was a real eye-opener and his first step in becoming the greatest investor of all time. After being rejected from Harvard, he was looking at the Columbia Business School and he found out by surprise that Benjamin Graham was one of the teachers there, so he applied immediately and got accepted. This was one of the happiest moments in his life, Warren said. At that time he was 20 years old and had $12,500, or $137,962 in today's money. Aside from being a teacher at Columbia Business School, Benjamin Graham was also an investor, running his own fund, the Graham-Newman Partnership. Funny fact was that Benjamin would use real-life investments as examples in his classes, giving away some free investment tips to his students. This to the frustration of his partner, as the price of stocks he was recommending in his classes subsequently rose. But Benjamin told his partner that they were already making enough money and therefore shouldn't worry about it too much. At the age of 21, and still being a Graham student at the Columbia Business School, he discovered Geico, an insurance company. To his surprise, he also discovered that Benjamin had invested heavily in this company. This piqued his curiosity and he set out to find out more. So on a cold, wintry Saturday morning, he jumped on the earliest train to Washington, D.C. and showed up at Geico's door. Buffett managed to gain access to the financial vice president, who happened to be there, and could convince him to spend 4 hours on a Saturday morning explaining to Buffett the ins and outs of the insurance business. Warren went back and was more excited about Geico than any other stock he came across. The next Monday he started buying Geico shares, and at the end of 1951 he had invested 65% of all of his money into this single stock. A year later in 1952 Warren Buffett sold all his shares of Geico for a quick profit of 50% and reinvested his money in Western National Insurance. The stock was only trading at $30, but making $20 profit per share. he bought as much he could. And after he found out that Union Railroad was paying $50 in dividends, but the stock price was only $35, he bought some stocks of it too. Did you know that Graham played such a huge role in shaping Buffett's career and investment philosophy that he later named his first son, Howard Graham Buffett, after Graham? At age 26, Warren's money had grown to $174,000 or $1,700,000 in today's money. After graduating at the Columbia Business School, he started his first investment partnership, Buffett Associates Limited. His partnership was limited to 7 partners, 4 family members and 3 close friends, with a total of $105,000 of their money invested with Warren. Warren used his investment skills, and from the period of 1957 to 1961 he managed to beat the Dow Jones on average with a 16% per year, or an incredible compound interest of 177%. So how did he do it? Warren was using the cigar butt strategy, a strategy that he learned from Graham at the Columbia Business School. In his 1989 Berkshire Hathaway annual letter to his shareholders, Buffett explained, "If you buy a stock at a sufficiently low price, there will usually be some hiccup in the fortunes of the business that gives you a chance to unload at a decent profit, even though the long-term performance of the business may be terrible." I call this the cigar butt approach to investing. A cigar butt found on the street that has only one puff left in it may not offer much of a smoke, but the bargain purchase will make that puff all profit. Warren would spend hours and hours screening Moody's and the Pink Sheets, looking for this kind of cigar butt company. In 1959 Warren met Charlie Munger. Charlie was a lawyer at that time. He and Warren shared the same passion for investing, and it didn't take long before they became best friends. Later on, Charlie even became vice chairman of Berkshire Hathaway. It was Charlie who convinced Warren that he should change his old investment strategy from looking for mediocre companies at bargain prices to great companies at fair prices. Warren realized that Charlie had a point, as his cigar butt strategy was good for investing with small amounts, but not really scalable when you needed to invest big amounts, like Warren was doing. Thanks to this new investment strategy, Warren and Charlie found great investments like Coca-Cola, See's Candy and many more. In 1962 Warren Buffett was managing a portfolio of $7,200,000 and Warren was worth $1,025,000 or $8,900,000 in today's money. Warren finally reached his millionaire status at the age of 32, keeping his promise to become a millionaire before he turned 35 years old. And as promised, I will now share with you 2 great books that can help you start investing like Warren Buffett. The first book is Security Analysis by Benjamin Graham, and the second book is The Little Book That Beats the Market by Joel Greenblatt. You can find the links for the books in the description below. I hope you've learned something from this video. If so, please give this video a like. If you want to see more videos like this in the future, make sure to subscribe to this channel and to check out my other videos. As Warren would say, the more you learn, the more you will earn. Thank you for watching, and I'll see you in the next video.